Take a look also at what we are watching ahead of the U.S. Treasury Secretary Scott Bessent's meeting with the Japanese Prime Minister Sanae Takaichi later today. Of course, the yen is expected to dominate some of these discussions. And joining us now for an analysis, Yujiro Goto is head of Japan FX strategy at Nomura. Yujiro, as one of our colleagues was highlighting earlier, there are a lot of things on the agenda because this meeting is coming at a critical time amid the war in Iran, but the yen seems to be front and center. What are you expecting out of Scott Bessent?
Yes, this is quite an interesting timing for Mr. Bessent's visit to Japan because Japan has very likely intervened just recently in the FX market. And his take on Japan's action to address yen weakness is quite important for yen trading going forward. And in my view, U.S. side, Mr. Bessent is quite comfortable with Japan's action to address yen weakness as suggested by rate check conducted by New York Fed in January. So U.S. stance is quite more supportive for Japan's intervention to support Japanese yen relative to 2022 or 2024 when Japan previously intervened in my view. So I think there will be some support for Japan's action from Bessent. And another important focus is his communication regarding the monetary policy of the Bank of Japan going forward. This is because in October and January, when Bessent met Finance Minister Katayama, readout from the U.S. Treasury clearly stated the importance of the communication and the formation of the monetary policy to address the excess volatility of the exchange rate, which is quite unusual for U.S. Treasury to directly comment on the monetary policy of Japan. So if stance is unchanged, I think there will be a growing pressure for the Bank of Japan to consider earlier rate hike as early as in June next meeting. So that type of comment can add further support for Japanese yen in my view. So not just the FX, but the monetary policy communication comment from the Bessent will be the focus today.
This also begs the question, the frequency of intervention that might require. I mean, you referenced the 2022, the 2024 episodes. There were a few bouts of Japanese officials stepping in to support the currency. What are you expecting this time around? And, you know, how much might that move the needle in terms of discouraging currency traders on the yen carry trade? One of the prerequisites, as we well know, is that there's lack of volatility, and certainly that's what we're seeing on the yen in spite of the weakness.
Yes, so I think Japan has already spent probably around 10 trillion yen, which is already very close to the amount Japan spent back in April and May 2024. But still, I think there is a chance or risk for additional round of intervention if the yen approaches toward 160 again. So in this round, the yen hasn't breached 155, and based on the CFTC data and so on, we believe that the positioning is still skewed toward yen short positions. So the position yen carry trade is not unwound completely yet. And I think if we hit 155, there will be some additional unwinding in the yen short positioning, and that can accelerate the yen weakness a little bit going forward by additional round of intervention. And I think commitment to support Japanese yen from Japanese authority is quite strong. So I think there is a good chance for additional intervention as the yen approaches 160.
Yujiro, it's also interesting because this is coming as the calculus for the BOJ continues shifting. Markets, maybe some of them are pricing in the June hike, but what happens if that doesn't transpire? I mean, we're just hearing from a panel of government advisors and how they seem to be discouraging a BOJ hike for the month of June, given how that could be prompting rising costs for corporates.
Yeah, so I think government Takaichi administration may not want BOJ to rush for tightening, given the uncertainty around the Middle East situation and elevated oil price. And in this regard, it's important that Bessent is going to see not just Finance Minister Katayama, but the Prime Minister Takaichi as well. So any communication, discussion about the monetary policy there could be potentially important to monitor. And also, I have to say, Bank of Japan is still should be supposed to be independent. And in this regard, today we are going to have a summary of opinions from the April meeting, and we need to monitor whether there are a growing momentum for earlier hike, not just the 3 dissenters, but the other remaining 6 board members. And this week and next week, relatively neutral board members, Mas-san and Koeda-san, are scheduled to speak. And those two guys are viewed as neutral board members, but still they didn't dissent in the April meeting. But if Mas-san this week and Koeda-san next week suggest they are comfortable with rate hike in June, not 3 but 5 board members will be voting for rate hike, which is clearly the majority. So I think those BOJ's independent communication is also worth monitoring this and next week to gauge the risk or chance of rate hike in June.
With that in mind, where do you see dollar yen at the end of the year, especially given how some of these expectations of Fed rate cuts continue being priced out?
Yeah, so dollar yen or dollar in general heavily depends on situation in the Middle East, which is not easy to forecast at the moment, honestly. But if we assume there will be some stabilization in the situation in Iran or Middle East, we believe that the de-dollarization trend is likely to reaccelerate toward the end of the year because uncertainty regarding the U.S. economic and general policy even higher after U.S. attack on Iran, in my view. So we believe that the dollar is going to be weak, not just against the Japanese yen, but the euro, Chinese renminbi, and broadly against major currencies. And based on that, gradual rate hike will add Japanese yen as well, and the dollar yen should decline toward 152 or 153 by end of the year, in our view.
Can I ask you as well, how are you assessing the interplay between other assets, the stock market, for example, or JGBs? I mean, we're looking at stocks, the chip sector really benefiting. Are there capital flow vulnerabilities that you're weighing out as well?
I think if we look at the fixed income flows, for example, from Japan, investment in the U.S. Treasury, U.S. bonds are gradually weakening since early 2025. And there has been some shift away from the U.S. bonds to other bond market like Europe and Australia in our view. So I think de-dollarization is having some impact on mostly fixed income market in the U.S., which is adding some pressure on the U.S. bond market. But what we are closely monitoring is whether Japanese investors are going to accelerate their repatriation back into JGBs or Japanese assets in general. And so far, we haven't observed a very clear signal yet, but clearly the yield level is much more attractive now for domestic investors to add exposure to JGBs. And I think BOJ's clear communication to avoid behind-the-curve type scenario is quite important for their investment attitude. And if market is confident about stabilization in Japan's inflation around 2%, I think Japanese investors will start repatriation more aggressively to support Japanese market, while U.S. dollar may weaken due to weaker Japanese investment into U.S. Treasury market.
Right. We keep coming back to this, the importance of communication from officials. Yujiro, great to have your analysis. Thank you so much for taking the time. Yujiro Goto is head of Japan FX strategy at Nomura.